Interested in real estate? How about wealth? Well, they go hand in hand. And here, you'll learn all about it. Welcome to Be the Bank, a podcast where we discuss and debate the topics centered around real estate investing. Your host, Justin Bogard, shares insights into investing in real estate to create real wealth and passive income for you and your family. He'll share stories of real estate investments done right, walk you through the process of owning a real estate note, and most importantly, educate you so you can be the bank. This is Be the Bank, brought to you by American Note Buyers. Now, here's your host, Justin Bogard.
Welcome back to another episode. This is number 6 of season 5 of the Be the Bank podcast, brought to you by American Note Buyers. Today, we're going to be talking about some stories about seller financing when we buy seller finance paper, meaning we'll get into this. Our description is called mom and pop paper. I have a guest on today that I'm going to interview and talk to and chat with, my friend, Mr. Marco Bario, and he'll be on in just a minute. And so he's also has been in the television business as well. So he's got a kind of interesting background. So you guys will have to stay tuned and listen to it. Mr. Marco Bario, how are you, my friend?
Justin, how are you?
Sorry, you're probably not Italian. Your name has nothing to do with Italian. I just pictured it as Italian.
I'm Italian.
He's Italian. I win. I'm so good. I'm so glad it's not Richard Thornton on the other side and it's you. I need a break from Richard. I'm just kidding. Richard's a good guy. I like to give him a hard time because, quite frankly, he doesn't really give it back to me. So it's just like a punching bag. So it's a one-way street in this experience. So I noticed that for those of you that are just listening to the podcast, we also stream this. We also record this on video. And you can go to our American Note Buyers YouTube channel as well to watch the video of this podcast. And Marco has his company name underneath his name, which is called Porch Swing Funding. Do you have a website, Marco?
I do. PorchSwingFunding.com.
That's easy. You got to make it complicated, man.
No way.
We're American Note Buyers, and ours is ambfunds.com. Doesn't make any sense, does it?
Funny thing happened this week. Last week, I guess. It's already been a long week this week. I have a Better Business Bureau page, and people can leave reviews for my company there.
Yeah.
And the woman left a scathing review because she had bought a swing for her front porch, and she must have confused my company with a company who actually sells porch swings.
I can see that happening.
So I contacted the Better Business Bureau and I said, I actually don't sell any products.
I don't swing porches. I don't sell porch swings. I don't do anything with porches or swings.
So they graciously took that review down.
That's good. My first company was called Bright Path, and then the initials REI at the end for real estate investor. And so there is an REI company that's kind of an outdoors type of company that's local here in Indianapolis. And so people would often get my company confused with that. And so they would look up on Google the phone number, and they would call me or they would text me and they would start talking to me about stuff. I'm like, I don't know what the heck you're talking about. And I finally realized, oh, you're talking about the outdoors company. Oh, I'm sorry.
They're not local. That's a big company, right? REI.
Well, I'm sorry. There is a local franchise here.
Okay, gotcha.
To where we live, and I didn't know they were a national brand. So thank you for bringing that up. Till you, for a while there, I just assumed this is a local company that was an outdoors company. So.
They're big.
So, anyways, we're not here to talk about that stuff. We're here to talk about seller financing, mom and pop paper. And I know that you've been in the real estate business for a little bit now, and you have been on several podcasts, and you have been doing presentations at events, and the basics of notes and another thing in the note business as well. But I kind of wanted to let you give a little bit of background as kind of where you came from and how you landed in the note business, if you wouldn't mind giving us a quick overview of that.
Yeah, you got it. Let's see, I'll go back a ways. You mentioned the television stuff, so I'll go back a little bit. I live in Los Angeles and in Sherman Oaks, California, and I moved here over 30 years ago. I'd gone to school in Boston, and I studied television production at a school called Emerson College, which Sunday night 2 of our graduates swept best screenplay,
Okay.
best director, and best picture for Everything Everywhere All at Once. But so
That's
those
awesome.
are my fellow alums. I didn't know them. They're younger than me.
Oh.
We're at that age where people younger than me are more successful than me. But I moved to Los Angeles and I worked in television for a long time in production offices, and I pushed schedules and budgets around. And then I transitioned within entertainment to become an executive for a big company called Technicolor. And we provided post-production services to all types of entertainment content. And I was in charge of theatrical post-production in Los Angeles for Technicolor on the digital side. We were transitioning from film-based services to digital-based services, a lot of technology, pushing a lot of data around, a lot of creative people working on movies. It was an awesome career. And then that industry has always continued to change. In fact, the Technicolor brand is no longer around. It was finally purchased a couple of years ago and they retired the brand. I was sad to see, but I was out of the business by then. I was already working in real estate. I got my start by going, I guess it's been about 6 or 7 years ago now. And I started going when all real estate meetups were in person.
Yeah.
I started going to a local real estate meetup group down in Manhattan Beach. And every month is a new topic. So whatever that month's topic was, that's what I was going to do, because those things tend to go. And eventually I decided I should pick something. So I picked notes. It happened to be the month I showed up, and that panel was a panel of note investors. And
Oh, wow.
there was a gentleman there named Gerald Lemoyne who was buying non-performing junior liens at the time. And that really connected with me. So that's where I started in the note business.
Very cool. That's a nice little story. So you no longer have an interest to jumping back into the television / production part of your life, right?
No, sir. Not movies, not TV. I'm done.
So if anybody has any aspirations of being that, just look, Marco was in it and now he's in notes. So everyone should just be in notes now. So Marco, we were talking offline quickly before we started recording this podcast, and we were just sharing some stories and stuff. And we have some similarities on some things that have happened to us. And I wanted you to share what you were talking to me about earlier that happened to you. I think you said last week.
Yeah, 30 minutes ago.
Well, 30 minutes ago.
30 minutes before we logged in and started talking. So it's still a little fresh.
Yeah.
I had to count to 10 a couple of times. Being a note and being a real estate investor at all, I can't emphasize enough. There wasn't only a learning curve there for me, but there was a learning curve for being an entrepreneur, which I'd done a bit of at a much larger scale at Technicolor and a couple of the other businesses I was part of in post-production. We had P&Ls and we had sales targets and budgets and things, but being a solo entrepreneur. And so something that happened 30 minutes ago, my business, I market to mom and pops around the country who hold seller finance real estate notes. And these are people, Justin, I know you're very familiar, but for those who aren't, who at one point owned a property. More often than not, the people I'm dealing with used to live in the property.
Yeah.
And they sell it. And instead of their buyer going to a bank or Quicken Loans or someone like that, an institutional lender, to receive a mortgage so that they can finance the purchase of the property, the buyer and the seller get together and agree that the buyer will, most of the time, although not always, give a down payment towards the purchase. And then the rest of the purchase price will be paid in installments over time, usually with interest, but not always with interest, I'll emphasize. So when they sell that house, when the seller sells the house and they close their transaction, the seller no longer owns property, but they own paper. And that's just a different type of asset that can be bought or sold. So in my transition from one career to another, really my third career, since I'd had a switch within entertainment, I wanted to do something entrepreneurial. I wanted to do something where I could connect with human beings. And eventually I started down this path of buying seller finance notes rather than working with non-performing notes. lawyers and servicers is what that world is. And now I deal with nice people around the country. Well, anyway, I had a note under contract. It was secured by a commercial property in Denver, Colorado. The seller used to operate it as he repaired Harley Davidson motorcycles.
Okay.
There. And the current, the buyer of that property converted it to a gym. Anyway, we were under contract, and I wasn't going to buy this note. I don't tend to buy commercial property. I tend to just buy for my own portfolio when it's secured by residential property.
Right.
So I was going to wholesale this note. So I had it under contract. And just like house wholesalers work, I do the same thing with paper that they do with property. I'll put the asset under a contract, and then I can assign my contract to somebody else, an investor or a bank or somebody who's going to fund the purchase of the contract. They're going to pay a little bit more than I promised the seller, and I'm going to make money in the middle of the transaction, essentially a wholesale fee.
Yeah.
So anyway, I had this under contract, and the buyer was on their way. In fact, I had just gotten an email this morning. The BPO came back, which is the broker's price opinion. It's like a drive-by appraisal, and that prompted me to well, as fate would dictate, prompted me to think of that deal again. I needed to follow up on a couple of things. Well, they reached out to me and said they already made an agreement to sell the note with somebody else. Not already, but after we had it under contract, and the person they agreed to sell it to wasn't really a third party. It was the buyer. And this happens sometimes.
Yeah.
I don't like it, but the seller reached out to the buyer and said, "Hey, just FYI, I made a deal. I'm going to sell this note." And how I imagine the conversation went was something like, "Well, how much are they going to pay you for it?"
Yeah.
"Well, I could pay you a little bit more if you'll accept a discounted payoff." So we took that offer, and I lost the deal. So me, the solo entrepreneur, I like that money for buying groceries and paying my mortgage. And, and eventually when I have extra, I go buy notes with it. But that was disappointing for me.
It's the kiss of death when in mom and pop notes, when you start talking with these motivated sellers and you get, a verbal agreement to sell their note or to buy their note from them at a certain price. And then they go talk to the borrower. And so it's something that you just can't control, but it's something I try to emphasize in the beginning. And you probably do this too. I'm just saying from my experience, because it has happened to me several times to where they went back. It's like, "Hey, we're going to sell your note." And like, "Oh, really? Exactly what you just said." "Well, how much are they going to give you for it?" "Well, I can, if you'll take this much, I'll just give you that money. Would you be willing to, wipe the debt clean?" And sure enough, it does happen. So we typically, it doesn't happen very often, but it has happened before. And we always tell the seller, like, "Look, we don't need to contact the borrower because they're going to have a piece of paper after we sell that says, 'Hey, look, such and such is going to happen. And you're going to start paying XYZ company instead of me.'" So that helps a little bit with them not having to, contact the borrower in our experience a little bit. But yeah, that's definitely happened a few times to us. And we're just like going, smack the hand smacks the forehead. And you're just going like, "Oh man, like, come on, we're right there."
I have a comment and a question for you, Justin.
Sure.
The comment is this: in this case, this buyer, they sometimes conduct a payor interview. So in fact, the email I received was, "Hey, we need the information and permission from the seller to contract his payor." So he had to make contact and let them know that this was going to be coming. I do it too when I buy for my own portfolio. I like to talk to the people making the payments before I close. But the question for you is this, and this came up. Technically, I had this asset under contract. It's a one-page, very, very loosely worded contract, but it is under an agreement. Have you ever thought of pursuing any kind of damages?
Every time that hamster wheel starts turning in my head, going,
"Oh,
man,
it's turning.
I want to take it to this guy. He swindled me, But then I think about it: is it really worth my time? At the end of the day, the borrower, and I know you're like this too, you're pro the borrower. The borrower really benefits from it because it's their house. They lived in it for a while, which unfortunately we couldn't partake in the cash flow that we wanted to get. But no, I've never pursued litigation on that. And like I said, it doesn't happen very often, but I may have a hard time getting through that in court as well. And I I know that you know this, and the audience knows this too. It's just that when you get attorneys involved, nobody wins. No, nobody wins. It's a lot of time and a lot of money, no matter what.
I probably wouldn't do it, and I'd probably never do it. But it's being recorded, right? But in this case, I get it. Yes, it benefits the payor, and yes, I wouldn't stand in the way of that. It stings, yes, but it happens. If another buyer comes in, if I have it under agreement, and Justin, you come in and try to put the same, that's a little dirty, I think.
Yeah, it is. I haven't had one of those situations happen to where I had it under contract and they just resold it to another note buyer. But I definitely have had it happen where the borrower.
I actually, when I had it happen, I had it happen once. It's a long story. It was a girlfriend of the original note holder, and somehow she ended up it wasn't a divorce, but somehow she ended up with control of this asset, and she went to sell it. And I told her that the buyer was going to need to conduct an interview of the person making the payments. And she's like, ooh, we probably shouldn't do that. She didn't want this person to call the boyfriend and it to start World War VII for them, I guess. And she found another buyer who didn't require that. And that's how I lost that deal. So again, did I pursue anything? No.
Well, your due diligence is spot on. It's something that you should do. We don't do it too often because a lot of the notes that we buy are pretty much brand new. And so the borrower's aware of what's going on already. So, but in instances where we're buying paper that has a lot of seasoning on it, we'll let them know that I hope you don't mind, but we want your permission. So we're going to contact that borrower so that they know what's going on, because that's what the borrower and the seller's mindset is. Like, oh my God, what's going to happen? Is the borrower going to get in the way of the deal? We actually, funny story. I don't know if I've said this on camera before, but I had a borrower. Well, I'm sorry. I was buying paper that I had under contract, and I was getting ready to buy it, and closing paper was being generated. The note seller had contacted the borrower and was explaining what was going on, and the borrower went absolutely berserk on the seller and was like threatening to sue and was just basically scaring the lights out of the note seller. And he said, Justin, I am really, really sorry, but I am, deathly scared of getting into a litigation right now because of X, Y, and Z. And this guy is threatening all this stuff that he's going to do. Now, this is illegal. And I said, I try to calm him down, said, look, this isn't illegal. He really can't do anything about it. But I said, if you're not comfortable with it, let's not move forward, because I don't want you to, not lose sleep over this deal. It's like, this is, I would love to take this over, but it's not worth it if you're going to cause you more stress. So that was a really odd thing that happened to me.
I had a guy yell at me after I bought the note. I didn't talk to him before I bought it, but when I closed, I called the payor and introduced myself, and he was pissed. He was pissed at me. And you told me not to curse on your podcast. I won't tell you what he said, but he wasn't happy. And the funny thing is, I live in California. And he said, where are you calling me from? And I said, California. He said, California. That really pissed him off.
Oh.
he was in Oklahoma. He didn't like our kind, I guess.
Oh, man. Should have said that.
So he stopped making payments. It was a performing note. He was so mad he wouldn't make any payments. And we started legal. I started legal. Yeah. And then eventually the attorney got a full payoff, and that was that. So turned out very well for me.
Yeah. Sometimes situations look a little scary and they end up actually, profiting you very well. So we've had a lot of really weird situations happen. And this is what I love about the note business. It's never the same thing. No two notes are identical. My underwriting is always a little bit different. And, people ask me, I don't know, you chime in if you feel the same way, but everyone tries to simplify buying a note as if it's just a pre-canned answer of like, it's exactly this much of whatever's left on the balance. And that couldn't be more further from the truth for me. There's so many different factors that weigh into buying a note, especially a mom and pop note that we're talking about, where a lot of mechanics are not sound. It's not done with a title policy, right? They didn't close at a title company. They don't have a loan policy. They didn't write it on a mortgage. They wrote it on a land contract they got off a LegalZoom. It's just so many things are just, you have to fix on it that it's like, you can't. Yeah. So
it's Main Street, after the years for me of dealing with directors and producers and studio execs, and I've been screamed at by all the above, believe me. I love the sellers. I would say if I have a specialty, it's the ones who are more down to earth, and we just end up talking. I had a conversation with a seller last week, and we were on the phone for more than an hour. I think that was a record for me. It was her first phone call to me. I heard about her business. I heard about, by the way, she has a title business and she's a realtor in Texas.
Oh,
she's a resource.
Yeah, there you go.
Yeah, no, she's great. Right outside Austin. She's great. But I heard about her divorce. I heard about her new marriage. I heard about her kids. I heard, did I mention talking about her note yet? No. That's so much of it for me is getting to talk to people around the country. I really love that part of my job.
That's Richard. Richard is really good at that. I'm kind of impatient. That's why they stick me back in operations, and Richard's kind of the salesman of our team here. But yeah, he loves it too. He loves talking on the phone with borrowers. He tells me all these stories. He writes these notes on them, and I read them about each of these loans. Like, oh my God, that is so funny, or oh, that's so sad, man. How did this happen to them? Like, what is going on? And things are just so different. The emotions of being on the phone with somebody to just, appreciate, understand, and empathize at what they're going through. And then also just hear these funny things. It's like, I can't believe this happened to them. It's just amazing.
Most of my customers don't sell because of money. Yeah, there's, I could use this money for something, but they mostly sell because they're moving on. Kind of have an extra note they don't need or want anymore, and they want to move on. Someone's passed away, the husband's passed away, and now the widow, his widow's calling me, and every time a check comes in, it reminds me of my husband and the house we used to live in, and I'd just like to move on from it. What would you give me for it?
Yeah. I've seen that happen with us before as well. Not too often with a deceased spouse, but you're right. It does happen because you're exactly right. It's that emotional tie to it. It's like it just reminds them in a negative way, and it's just like I just need to move on from that. So yeah, well, luckily we can help them with that. And by no means there's either of us here on. I feel like I can say this about you. We're not taking advantage of anybody. We're just giving them fair market price on really what we can afford to do. We have a cost with our money. Just like anybody else, whether it's our money or we're borrowing money, there's still a cost to it. And we have to calculate that in there and be like, this is what we can give you for this note based on this information. We're not trying to get 1% of value or anything. We're trying to give a fair price. And we feel like we're pretty confident on what fair market price is for some of this stuff.
Yeah, every time for me.
So getting back to pricing loans, I often hear from other note investors that get into it for the first time. Maybe they bought a couple of deals and they buy them from, let's just say, hedge funds, or maybe there's some sort of website that they can go to and everything's kind of handed to them on a silver platter. And, they have everything they need in front of them, all the documentation, a nice clean pay history, a good summary, executive summary of kind of what the asset is about, how they bought it, why they have it, what's going on with it today, the property stuff. And then you go to a mom and pop. And you pretty much get none of that stuff. You kind of have to pull information from them. You have to kind of scrape together as what I call discovery, like you're like an attorney trying to go into a lawsuit. I don't know why I use references to attorneys often, but I do. But you have to pull together all this information, and you have to think about like, okay, now if they did this under their LLC, I need to make sure, can they legally sign under their LLC? Do they actually have a valid LLC? Like, there's all these things that you have to check and stuff. When you do this mom and pop paper, which is why we are able to discount it a little bit more than buying it off of a website that has everything done for you, so to speak. So is that your experience as well?
Well, when I close some of those things like the LLC, for instance, I close through title and I purchase a new lender's policy. So they're verifying things like that on my behalf, and I'm insured in the event that they weren't able to sign because it was title that checked that for me.
Yeah.
The pay history can be rough and can be kind of weird. Yeah. I use affidavits when things are questionable. I've had the payor sign affidavit. Sometimes that's required, or sometimes just almost always the seller will sign one. Sometimes they're service, sometimes they're not. I write a newsletter. I can. Is it okay if I mention that?
Yeah,
here?
Go ahead. Absolutely.
Yeah. So every Sunday there's a newsletter that I write that comes out called Seller Financing Sunday.
Okay.
And if you go to my website, Porch Swing Funding, under resources, you can sign up for that. There are 2 tidbits in there about seller financing and notes, mostly related to seller finance notes. But anyway, this in the process of buying a note right now, secured by a property in Alaska, and it's serviced, although this is an important distinction, by an escrow company. And
Okay.
escrow companies, sometimes they come up in the seller finance world. They're sometimes associated with the title company who closes the sale transaction.
Yeah.
Or sometimes it's just an independent company. Well, this one's independent, but usually when escrow is involved, both parties sign, the payor and the payee, the seller and the buyer.
Mm-hmm.
And it's a contract that stipulates that both parties have to agree to terminate the contract. So it's not like, I know a lot of, when I got into the note buying business, into the note business, I was just dealing with institutional paper, and you can, as the lender, you can move the servicing anywhere you want. That's not the case when an escrow company is involved. So that became a bit of but we've been trying to close this one for 3 months now. It's been just sort of a pain in the neck, mostly because the seller is not friendly with the buyer, the property buyer, does not care for the gentleman who she's making the payments to. And she wants to make it as difficult for him and therefore for us as possible. And lo and behold, could you just please sign this form that says you'll release the servicing? We're going to move it to someone. They're, do all the same stuff. They'll send you statements. And no, I don't have to do that. Here we go. But,
right.
But it is an important distinction.
I'm glad you brought that up, because we actually haven't talked about that before in any of our podcasts that we've done. But that has been a challenge. When I first got into the note business, there was a note seller that had created a bunch of seller finance paper, and they would use an escrow company because, quite frankly, they were cheap. They cost like $8 or $9 a month, because they're not really servicing the loan. They're just collecting a payment. They're just a collection agency, if you will. They don't have any licensing requirements. They don't have any, debt servicing
license under escrow rules, which are still state licenses, but yes,
but not for like professional loan servicing, like as we consider that. But you're right, because what you're explaining is exactly what we had to do. We had to go to the borrower and say, "Hey, could you please sign this over and release the rights?" And then they get confused, like, why would I want to do that? What's going on? What are you doing? And sometimes they don't speak, English as their prominent language, and so then there's another barrier you have to get over. Then they're already skittish because they were unsure about what they were signing to begin with land contracts or note mortgages. So that, it's a huge hurdle. So when someone has that, there's, go ahead and go over the cross sign, unless you're watching the video here, I'm giving the Hail Mary. It's a if then, 50-50 if I actually get that deal or not, because exactly what you said.
It's, frankly, it's another reason to have a phone call with the payor for me. I come in peace in that conversation.
Right.
I come, of course, I'm putting a few open-ended statements and questions out there that allow them to say, well, the roof's been leaking. It's not an interview so much. It's called an interview, but they're not under no obligation to talk to me. But if I come and I'm friendly with them and say, I figured you might have some questions about this. I wanted to give you a chance to ask me the questions directly. One of the questions we receive a lot is, well, is my payment going to change? No, nothing's changing. All we're doing is stepping into the shoes of the person you've been making the payments to. And the only thing that will change is where you send the payment. In fact, more often than not, the company we use is going to offer some services like a web portal and statements emailed to you, and your tax forms coming at the end of the year that maybe, and ACH payments that maybe you didn't have access to now. So I usually kind of start with that and then say, oh, by the way, looks like you're going to need to sign this form. Oh, okay.
Getting some phone calls here.
It's been busy. It's been busy, Justin. I'm thankful for that.
Good. That's awesome, man. Well, Marco, I know we've taken up some of your time here today. Thank you so much for being on our podcast, episode number 6 of Season 5, brought to you by American Note Buyers. And go ahead and give your website one more time.
Sure. So Porch Swing Funding is my company. So porchswingfunding.com. And again, I would love for you to sign up for my newsletter. If you're interested enough to listen to this, I'm sure you'll like the newsletter. It's free and it's really lightweight, and it comes out every Sunday. So go to the resources tab and you'll see the newsletter. Sign up there.
That is episode number 6 for you guys. So we will see you on the next episode. Thanks, Marco.
Thank you.
Thanks for listening to Be the Bank. We hope you learned something from today's show. If you enjoyed this episode, please rate and review us. Plus, check out our channel on YouTube and follow us on Facebook and Twitter at Be the Bank and on Instagram at Be the Bank Podcast. Be the Bank is sponsored by American Note Buyers. Thanks again for listening.